They are selling our future. Inside a copper-lined vault, a server hums. It is executing a new trade. The smartest money is quietly withdrawing. They are not betting on progress. They are pricing in our collapse. And if their math is correct, we are standing on the precipice of the greatest wealth migration in human history. While the public is distracted by the endless upward march of the Nasdaq, a silent exodus is underway behind closed doors. The very people who built our digital world are quietly liquidating their creations. They are trading their paper empires for physical reality. This is not a theory. It is written in cold public filings. It is stamped onto the balance sheets of sovereign central banks. It is humming in the over-allocated power grids of Virginia and Texas. A quiet realization has swept through the corridors of ultimate power. The digital illusion is hitting a hard, physical ceiling. For 30 years, we believed we could print infinite prosperity. We believed a line on a chart could grow forever without needing physical ground to stand on. But the mathematics of reality are undefeated. And the equation is simple. Physical limits always defeat exponential printing. When the system attempts to run an infinite digital simulation on a finite physical planet, something eventually snaps. And here's the twist that no one is talking about. The very technologies promised to save us, like artificial intelligence and clean energy, are actually accelerating this collapse. They are demanding physical resources that do not exist on this earth. The elites have seen the crack in the foundation. They are not waiting for the house to fall. They are packing the silver, the gold, the land, and the power. And they are leaving the rest of us with the paper. What structural breaking point have they detected? What is forcing them to quietly liquidate paper wealth and hoard physical reality? To find out, we must follow the trail of their liquidation. Look closely at the peak. Over the last 12 months, the creators of our digital future have embarked on an unprecedented selling spree. These are not random scheduled liquidations. This is a systematic, highly coordinated exit. The founders of the world's most valuable technology firms are quietly trading their shares for cash and then trading that cash for physical security. Jeff Bezos liquidated over $8 billion of Amazon stock in a single, rapid window. Mark Zuckerberg has divested hundreds of millions of dollars of Meta shares, week after week. Even Jamie Dimon, the titan of Wall Street, sold JP Morgan stock for the first time in his entire 19-year tenure. Ask yourself a simple question. Why would the visionaries of the digital age trade their high-performing, cutting-edge stock for dead, static, physical assets? Here is the glaring contradiction. They tell the public that artificial intelligence will solve every human limitation, ushering in a post-scarcity utopia. They tell you the market is healthier than ever. But their actions tell a completely different story. While they sell you the promise of a digital future, they are building heavily fortified, fully off-grid survival compounds in the middle of the Pacific. On the isolated island of Kauai, a massive compound is rising behind high walls. It features water purification systems, self-sustaining energy grids, and deep underground bunkers. It is paid for with the liquidated equity of the digital cloud. This is the great paradox of our time. The pioneers of the future are hedging against the future. They know that paper wealth is only valuable as long as the illusion of stability holds. When the liquidity tide goes out, paper equity becomes nothing more than pixels on a dead screen. They are quietly moving across the bridge from the virtual to the tangible, buying up agricultural land, securing private energy generation, and locking down physical commodities. They are leaving the retail investor holding the bag, a bag filled with overvalued tech stocks trading at multiples that defy physical gravity. They have built the casino, they have collected their chips, and now they are walking out the door before the power is cut. But why are they fleeing now? To understand their panic, we must look at what the world's largest central banks are doing with their own cash reserves. They are not the only ones running for cover. In the subterranean vaults of the world's central banks, a quiet panic is unfolding. For decades, global central banks were content to hold their reserves in digital ledger entries, U.S. Treasury bonds, and paper promises. But that trust has completely evaporated. Today, central banks are purchasing physical gold at a rate not seen since 1967. That was the year the London gold pool collapsed, signaling the end of the global monetary order. This is not a standard portfolio rebalancing. This is a frantic race to repatriate physical metal. Sovereign nations are no longer willing to leave their gold in foreign vaults. They are demanding physical delivery. They want the heavy, yellow metal back in their own capitals. Poland recently repatriated over 100 tons of gold from London, loading heavily guarded transport planes under the cover of darkness and flying the bullion back to Warsaw to be locked away in highly secure domestic vaults. Think about the sheer irony here. The very institutions that print the fiat paper currency we use every day are frantically trading that paper for physical gold. They tell us paper is money, yet they hoard the metal. Why? Because they understand the ultimate rule of monetary history. If you do not hold it, you do not own it. When global trust breaks down, a paper claim on gold in a London vault is worth absolutely nothing. Only the physical bar sitting in your own vault matters. We are witnessing the slow, deliberate de-dollarization of the global economy. Eastern powers are accumulating gold to back a new monetary reality, preparing for a world where fiat currencies are printed into oblivion. When the reserve currency of the world is backed by nothing but debt, the only true reserve asset is the one that cannot be printed. Gold is not just an inflation hedge. It is a systemic insurance policy. And the institutions that print the paper money are the very ones hoarding the gold. But there is an even deeper threat. While central banks lock away gold, the digital empire is about to collide with a physical limit that no amount of money can bypass. The world is infatuated with artificial intelligence. We are told it will drive the next industrial revolution, a weightless, frictionless technology that lives in the cloud. But the cloud is not weightless. The cloud is made of copper, steel, silicon, and water. And above all else, it is made of electricity. We are about to hit a wall made of pure physics. An AI search query requires up to 10 times more electricity than a standard Google search. To power the millions of servers required for the AI revolution, we need an amount of energy that our current electrical grid cannot physically support. In Northern Virginia, home to Data Center Alley, the local utility provider recently warned that the grid is reaching its absolute limit. They cannot run the transmission lines fast enough. Here is the profound contradiction. We are told we are transitioning to a green, digitized future. Yet tech giants are forced to buy up dying 20th century coal and nuclear plants just to keep 21st century code running. Microsoft recently signed a deal to resurrect the 3 Mile Island nuclear power plant, buying 100% of its output for the next 20 years. Amazon purchased a massive data center campus directly connected to a nuclear plant in Pennsylvania. They know the green energy transition is a mathematical impossibility for high-density computing. Wind and solar cannot provide the constant baseload power required to keep these artificial minds awake. They require raw, constant thermal energy. If the power grid fails, the multi-trillion-dollar valuation of the tech sector vanishes instantly. Without physical electricity, the digital economy is nothing but dead silicon. We are trading our energy security for digital convenience. And the smart money is quietly buying up the power plants, while the public buys the stocks that rely on them. But what happens when the financial claims on these underlying resources far exceed what physically exists? Most investors believe they own physical assets. When they buy a commodity ETF, they see a ticker on their phone. They see the word gold, copper, or silver, and they believe their wealth is backed by something solid. This is a dangerous delusion. The paper derivative markets are a massive, leveraged house of cards. In the London and New York precious metals exchanges, gold and silver are traded in astronomical quantities. But only a tiny fraction of that trade involves the actual physical delivery of the metal. For every single physical ounce of gold sitting in a commercial vault, there are up to 100 paper claims circulating in the financial system. It is a game of musical chairs, played with global wealth. As long as everyone is content to hold paper certificates and digital receipts, the game continues. But what happens when the music stops? What happens when a major sovereign buyer or institutional fund demands physical delivery of their metal? The exchanges will run dry instantly. This is the leverage trap. The financial system has created a mountain of paper claims on a molehill of physical reality. And it is not just precious metals. It is copper, silver, uranium, and oil. We have financialized the physical world to such an extent that we have lost track of the physical world itself. Here is the shocking secret, written into the fine print of your brokerage account. When a true supply shock occurs, the exchange rules allow them to settle paper contracts in cash, not physical metal. They will change the rules of the game to protect themselves. You will be handed hyperinflated paper fiat, while the physical assets are locked behind closed doors for the elite. The smart money has already realized this. They are not buying the ETF. They are taking physical delivery, removing the asset from the financial system entirely. But the clock is ticking, and a massive mathematical wall is fast approaching. This shift is not random. It is driven by a cold, mathematical countdown. The global debt bubble has entered its terminal phase. We are no longer talking about a standard economic cycle of recession and recovery. We are talking about a structural credit event. Look at the sovereign debt of the United States. It is growing by $1 trillion every 100 days. The interest payments alone have crossed the $1 trillion annual mark. This is money that must be paid just to keep the lights on, more than we spend on our entire national defense. At the same time, a massive wall of sovereign debt is maturing over the next 12 to 18 months. This old debt, which was issued at near zero interest rates, must now be refinanced at much higher current rates. This will cause interest payments to explode exponentially. The math is simple, brutal, and absolute. There is no tax base large enough to cover this liability. There is no economic growth rate fast enough to outrun this debt. There is only one mathematical escape route: the monetization of the debt. The central banks must print the money to buy their own government bonds, debasing the currency to prevent a nominal default. They will choose inflation over default every single time, because inflation is a silent tax that robs the population without their consent. Here is the shocking truth. The US government is borrowing $1 trillion every 100 days just to pay interest to the private banks that control the system, locking in a mathematical certainty of hyperinflation. The smart money knows exactly when this wall of refinancing hits. They are watching the overnight funding markets, watching the sovereign bond yields, and positioning themselves to be on the winning side of the Great Reset. How do you prepare before the music stops? So, how do you protect yourself? How do you emulate the strategy of the elite before the liquidity gate slams shut? You must change your definition of wealth. You must stop thinking in terms of currency and start thinking in terms of physical scarcity. The smart money is building what we call the scarcity portfolio. They are not trying to beat the market. They are trying to survive the market. This portfolio is built on 3 core pillars: tangible energy, physical commodities, and sovereign gold. They are purchasing copper mines in South America because copper is the physical blood of the modern world. They are buying up high-quality agricultural land with independent water rights. And they are hoarding physical gold and silver in private vaults far away from the commercial banking system. They are not holding paper receipts. They are holding the real assets. For the retail investor, the path is clear, though the window of opportunity is closing. You must reduce your exposure to paper assets that rely on endless credit expansion. You must transition toward physical assets that cannot be printed or debased. This does not mean selling everything and hiding in a cabin. It means securing a foundation of real wealth. Own some physical gold and silver in your own possession. Secure energy independence where you can. Own assets that have a direct, undeniable utility in the physical world. When the paper system resets, the relative value of these physical assets will skyrocket because they cannot be printed into existence by a central bank. They are limited by the laws of physics. And in the end, physics always wins. We have lived through an extraordinary period of history. A period where we believed that digital wealth was the ultimate achievement of human progress. We built empires of code, and we built fortunes out of paper. But we are about to be reminded of a fundamental truth. You cannot eat a stock option. You cannot build a house out of digital currency. You cannot run a society on promises. The transition back to a physical reality will be painful for those who are unprepared. It will feel like the end of the world. But it is not the end of the world. It is simply the end of a great paper illusion. The wealth of the world is not disappearing. It is merely migrating back to where it belongs. Back to the Earth. Back to the physical limits of our planet. Back to the tangible things that keep us alive, warm, and secure. The smartest money in the world has already crossed the bridge. They have left the digital casino behind. They are sitting quietly in their physical vaults, waiting for the dust to settle. Now, the only question that remains is which side of the bridge you will be standing on when the gate finally closes.